All right, welcome back, everyone, to the deep dive. Today, we are really digging into some of the market's biggest movers, getting past the headlines to what really matters for you. Our mission, as always, is to pull out those key insights from all the latest financial talk, basically giving you that shortcut to knowing what's going on. It's like getting a real-time pulse check, a true Market AM sentiment snapshot, capturing that morning mood. And we're zeroing in on specific companies today, looking at how sentiment, policy, these big macro trends, how they're shaping stocks. It's really about the why behind the moves. Okay, let's unpack this. So first up, we really have to talk about what Wall Street's calling the most expensive race on earth. Nvidia and Microsoft. It's this huge trillion-dollar battle. Who hits $4 trillion first? I mean, think about it. Together, they're over $7.5 trillion in market cap. They basically control, well, almost all of AI's infrastructure, the ideas, the potential upside. This isn't just bragging rights, is it? It feels like a defining moment.
Oh, absolutely. It really signals where the market thinks the future value of AI is going to land. And what's so interesting is how, their roles are so clear, but also so linked. You've got Nvidia, the chip giant. They're basically minting gold with their H100s, the Blackwells.
These top-tier GPUs.
The absolute bedrock for AI right now.
Exactly, the foundation. They even briefly overtook Microsoft recently, slipped past them for that most valuable company title, rallied again this week too. They've essentially got a monopoly on the really advanced AI chips and the financial ripple effect.
I saw that number. For every dollar spent on their silicon.
Right, something like $8 to $10 ripples downstream across the whole tech stack, cloud services, apps, everything.
That's incredible leverage. Really shows the investor confidence there.
It really does.
But then you have Microsoft, the AI software sovereign, as some call it. They're not making the chips, but they're building everything on top, right?
Yeah.
Copilot in, everything. Azure Cloud is embedded in almost every big company's plan. Precisely. So while Nvidia is making the gold, Microsoft is perfectly positioned to scoop up those ripples. They're building this moat around their services.
It's capturing huge value downstream. Yeah, makes sense. It's all about the platform.
Exactly. Platform and ecosystem power. And analysts are all over this. Dan Ives at Wedbush, he called it the race to $4 trillion. He points to, the huge spending by hyperscalers, Amazon, Google, Microsoft itself, pouring billions into AI infrastructure.
Plus the GPU shortage isn't helping demand ease up.
Not at all. And then there's what Ives calls investor FOMO, fear of missing out. Big time.
So he thinks they'll both hit $4 trillion soon.
He's betting on this summer and already talking about $5 trillion as the next stop.
Wow. That shows some serious belief in AI's power.
No kidding. The scale is just immense.
But here's where it gets really interesting, right? It's not a totally smooth ride for either of them.
Yeah.
These are massive, complex operations.
That's the tension. They're deeply interconnected, but also vulnerable. For Nvidia, maybe a supply chain hiccup, a manufacturing delay.
Or a competitor makes a surprise move.
Right. And for Microsoft, maybe cloud earnings disappoint slightly. Azure adoption slows a bit.
Could easily send them sliding back. Back to square trillion, as one source put it.
Yeah, exactly. The market is watching so closely for any little bump. And fundamentally, this whole race, it's more than just the number. It's really a referendum, isn't it? Where does AI's value actually live?
Is it the chips? The hardware?
Or is it the platforms, the software delivering the AI to users? Silicon versus software, chip versus cloud.
Someone called it a coin flip. But a very expensive one.
A $300 billion coin flip, yeah. Based on the current valuation gap, how this plays out tells us so much about where the AI economy is heading, shapes investment strategy for years.
Yeah, are you investing in the shovel makers or the towns built during the gold rush? Different risks.
Exactly. Different growth paths.
Okay, so shifting gears from those AI titans, let's look at how specific government policies and company news are causing some very distinct stock moves. Really immediate sentiment shifts.
Yeah, we've seen some clear winners just this week. Positive sentiment, immediate stock jumps, tied directly to policy or company actions, like Juniper Networks, surged 8% pre-market, and HPE, Hewlett-Packard Enterprise, up 4%.
Ah, that was the Justice Department settlement, right, on the acquisition.
Exactly. The DOJ settled the lawsuit challenging HPE's $14 billion buy of Juniper. That regulatory cloud lifted, boom. Instant positive sentiment, the path cleared.
We also saw banks rallying. Goldman Sachs, Wells Fargo.
Right. That followed the Fed announcing the big banks cleared the annual stress test.
Which is basically a can you survive a massive crisis test.
Pretty much. So clearing it Signals real financial health stability, big confidence booster for investors about their resilience, maybe capital returns down the line.
And UBS, too.
Yep, UBS shares edged up in Europe. They announced a $2 billion stock buyback. Returning cash to shareholders, always a positive signal.
Okay, but policy cuts both ways.
Huh.
We saw negative sentiment hit some stocks, too. Solar companies, for instance. Enphase, NextEra, Sunrun, they all dropped pre-market.
Yeah, that's linked to a proposed Senate budget bill. It looks like it would end key tax credits for big wind and solar projects if they aren't running by 2027.
And it hits residential solar, too.
Looks like it. Ending credits for home solar panels as well. That's potentially a huge blow since those credits drive a lot of demand.
And Tesla got caught in that same bill, didn't it?
It did. Shares fell over 1%. The bill would end the EV tax credits much sooner than expected, after September.
Directly hitting the incentive for people to buy EVs.
Right. And Elon Musk's reaction was pretty strong. Called the bill utterly insane and destructive. Shows how potent these policy shifts are.
It really does. Immediate impact.
But what's really fascinating is how direct policy changes, especially around subsidies or incentive, can just instantly move stocks, sometimes completely against recent performance.
Speaking of counterintuitive moves, Nike, this one was surprising. They reported, well, pre-ref earnings, worst sales drop in 5 years, I think.
That's right. But the stock surged, up 16% right after.
And it wasn't the numbers, was it? It was the CEO.
Entirely. The sentiment shifted purely based on the CEO saying, effectively, we can only go up from here. That forward-looking confidence.
Shows the power of narrative, doesn't it? Leadership. The market buying into the future story, not the past quarter.
Absolutely. It's not always about the history books. Sometimes it's about believing the comeback story. Investor perception is incredibly powerful.
Yeah, it really highlights how sentiment can swing from fundamentals to policy risk, or even just, like you said, narrative.
It's a constant dynamic. Today's news isn't just about today's results. It's about tomorrow's policy, tomorrow's confidence.
Definitely underscores that interplay.
Yeah.
Okay, so let's broaden out again. Look at the bigger economic picture, trade developments, stuff influencing the whole market.
Yeah, these broader cross-currents set the stage, really. One significant bit of good news recently was the U.S.-Canada trade situation. Looks like negotiations are back on track. Deadline July 21st.
They came after Canada back down on that digital services tax, the one hitting Amazon, Google, Meta.
Exactly. Canada rescinded it. And that de-escalation is seen as good news for the stock market. Reduces friction, adds certainty, especially for tech. Always good for stability.
And then there was that surprising U.S.-China deal on rare earths.
Yeah, quite interesting. An agreement to ease some tech restrictions, restart rare earth exports from China.
Treasury Secretary Bessent called it de-escalation, a temporary unclogging of supply chains.
Seems like it. It's not solving everything, of course, but it's described as this delicate dance, a soft truce in mineral diplomacy.
Mineral diplomacy. That's the fight over critical materials, right? For tech, EVs, defense.
Precisely. So even a temporary easing is pretty important for global manufacturing.
Okay, looking ahead, what's on the economic calendar? Jobs data.
Yep, big one this Thursday. Wall Street's waiting. June jobs report expected to show maybe around 113,000 non-farm jobs added. Unemployment possibly ticking up a bit to 4.3%.
And this feeds right into the Fed's thinking, doesn't it?
Directly. The market's watching closely for a potential rate cut, maybe as soon as the July 30th decision.
So a weak jobs report could actually be good news for the market.
Could be. A particularly weak jobs report, as they say, could put a July rate cut into play. Lower rates generally boost markets, stimulate activity.
And general consumer mood seems okay.
Actually, yeah. American economic confidence was up 16% in June, highest in months. That adds to the overall belief, a bit of optimism, maybe.
Interesting mix. Now, amidst all this, Apple seems to be sending, well, mixed signals.
Yep.
Their F1 movie with Brad Pitt did great at the box office, right? Big numbers.
Huge debut, 55 million domestic, 144 million global. Definitely a hit.
But analysts aren't entirely focused on Hollywood, are they?
No. Laura Martin at Needham called the film stuff a distraction, actually, from more core investor worries.
Like the iPhone cycle.
And AI.
Exactly.
Yeah.
How fast are people replacing iPhones? And crucially, what's Apple's generative AI strategy? How quickly can they integrate that cutting-edge AI to drive upgrades?
She said Apple is in chaos right now. That's strong wording. It is. Refers to those internal pressures, market pressures. So, success in one area, but big questions remain about the core business innovation. creates a kind of cautious feel around the stock.
So if we tie all these threads together.
Yeah, it becomes really clear how these big macro things, trade deals, economic data, Fed expectations, policy shifts, how they directly impact the companies we talked about earlier.
A good trade deal lifts sentiment broadly. Rate cut hopes do too.
Right, and policy uncertainty, like with solar or EVs, weighs things down, sometimes regardless of how the company itself is doing. It just reinforces how interconnected everything is. Global autonomy, financial markets, it's all linked.
Okay, so let's recap the big takeaways. We've got that intense AI race, Nvidia versus Microsoft, huge value, huge bullishness.
Silicon versus software playing out in real time.
Then the direct hit of policy-boosting banks and M&A deals, but hitting solar and EVs. And that surprising Nike jump based on pure confidence.
Shows sentiment can pivot fast.
And finally, the broader view. Cautious optimism, maybe? On trade, some positive signs, eyes glued on jobs data and the Fed.
Yeah, a complex but maybe cautiously forward-leaning feel.
So here's a thought to leave you with, building on that mineral diplomacy idea. Given how critical these global supply chains are and how quickly a soft truce like the China rare earths deal could flip back to tension, how might global trade policies keep surprising us?
Yeah, how could they reshape things for companies depending on those international links in the second half of the year? What's the biggest wild card, you see?
That's a really potent question to chew on. So what does all this mean for you listening in? It means really seeing how technology, policy, global economics, they're all tangled together. It's never just one factor.
It's always a web, dynamic, shifting.
Exactly. The key is trying to see the signals through the noise. Understand the why, not just the what. What does it imply for the path ahead? Thank you so much for joining us on this deep dive. We hope this Market AM Sentiment Snapshot helps you navigate things with a bit more insight.
Keep digging, keep asking questions.
Absolutely. We look forward to our next exploration together.